Hi, this is Alessio. Hope you're well. Welcome to a brand new video update on the chart of Tesla stock. And also in this video, I'll cover briefly the chart of Nvidia later in this video as well. So before we do that though, I want to cover the chart of Tesla stock, look at the potential wave counts, and also we'll look at this particular Elliott wave model. I'll explain where it potentially could be in this Elliott wave model. So let's go on to the charts and discuss Tesla and Nvidia. Alright guys, welcome back. Let me just say before I begin that I've noticed that quite a lot of people who watch my videos on Tesla and Nvidia that you probably have not yet subscribed to my channel. So if you haven't yet subscribed, I would really appreciate it guys if you hit the subscribe button, and also please enable notifications for future video updates. Okay, let's begin with the charts. I'm going to talk about Tesla, and then briefly we'll discuss Nvidia later at the end of the video. As far as Tesla is concerned, I will in a few moments. So later in this video, I'll discuss where I think we potentially could be in the overall bigger picture. One of the reasons why I apply Elliott wave theory is because it's the only method of analysis that gives you context. No other method of analysis gives you an idea of the bigger picture or indeed a context. And that's why we apply Elliott wave theory, and also because Elliott waves are based on probabilities and risk models. If you watched my previous videos, then I'm sure you know that I don't pretend that I have some kind of crystal ball. Nobody has a crystal ball. Nobody can predict the future. Elliott waves are not about predicting the future. They're about understanding what is probable, what is likely. Okay, so not what is certain. Guys, if you want certainty, you're not going to find it anywhere in charts or market analysis. Before I begin, let me also mention very quickly that some of you watched my video back in the summer, so probably spring or summer of last year. You probably know that I was not very optimistic or positive on Tesla. In fact, I was quite bearish on Tesla back at the time when the price of Tesla was here. And of course, the reason was that Tesla had failed to break through resistance, and the charts and the structure just was not sufficiently bullish for me at the time. And I have no regrets about that. I have to follow my rules. However, in November, after Tesla finally managed to break through resistance, you can see here. So in November of last year, Tesla managed to, with force, break through those two important resistance levels on the chart, 299 to 300, and then at 270. Because it broke through that resistance, as you can see there, then I changed my mind. It became bullish again. In fact, here's what I said on the 15th of November in my video at the time. So I think the wave 3 could extend higher to this region here. Again, $395, $400 approximately. And then we could see a pullback in what could be a wave 4 and then a wave 5. Wave 5 taking us eventually to about 450. All right, guys, welcome back, and thanks for watching that video. As you heard in that video from the 15th of November, here's a screenshot of that video. As you can see, my expectation for the wave 3 and 5 was actually quite modest. I was looking for the wave 3 to extend to 400 and the wave 5 after a pullback for the wave 4 to extend to 450. These other levels, by the way, 450 was the level that Tesla actually reached quite recently, as we can see here. So Tesla actually did manage to rally quite nicely to the 161.8% golden ratio extension, that blue line, at just near 450. And what that means is that the wave 3 is what we're looking at here. And this is our most recent potential wave 4. Okay, and I'll talk about wave 5 in a few minutes. But let me just show you the bigger picture. The bigger picture shows that this drop that occurred from 2021, okay, so this is 2021 high. This drop to 2023 was a likely A wave, a corrective A wave down, followed by a B wave rally. And B waves, as we know, are also corrective in structure. And we can see this is a B wave. This would take us eventually likely to much higher levels. Again, as long as we stay above, I think as long as Tesla stays above 300 or 330, we're dealing with a large B wave taking us up there to that region. And as we can see, B waves are also composed, as we can see in yellow, they're composed of smaller ABC waves. That's the A wave, B wave, and the C wave within this larger B wave structure as shown in blue. So once again, let me put this on the chart. A wave down, a large mega A wave down, and a large mega B wave up, itself composed of ABC waves, okay? And that means within this larger B wave, or should I say large C wave of the B wave, okay, a large ABC structure. So within this C wave, within this yellow C wave, where are we? Well, the way I see it, I think that we're quite likely, this is our smaller degree wave 1, smaller degree wave 2, smaller degree wave 3, then this would be a wave 4 pullback. Okay, so we're currently seeing the wave 4 pullback. This wave 4 pullback, by the way, could be anywhere, could complete anywhere in this region. I would say the recent low that it made there, just under 400, to potentially 361, 350 perhaps, and the 21 weekly moving average. So that's the blue line we see there on the chart. Okay, for the wave 4, and eventually a wave 5. So a wave 5 taking us perhaps the next several months, likely by the spring or the summer period. I would say the wave 5 could extend higher into this approximate region there. So yeah, between 530, 528, that's the 261.8% golden ratio extension there, shown as the brown line, to potentially the 300% extension there, that's the next blue line. That would be about 578 or 580, close to the 600 level. So I would say that wave 5 could be anywhere in this region between, the wave 5 of the C wave could be between 530 to 580 to 600 approximately. Okay, and that could take us several months to complete. So that's what I have there on the chart for the likely structure for the C wave. Before we continue, let me just say this portion of the video is sponsored by Radex Markets. So if you're looking for a reliable trading platform with fast execution and great customer service, then look no further than Radex Markets. Go on the link in the description and apply for an account. And remember, guys, any money we get from sponsors, we give to charity. One more time, I think that the higher probability is we're completing the wave 4 correction as shown there on the chart. The wave 4 correction after the wave 3 top that we made there. So wave 3 top there recently, then a wave 4 correction is what we're seeing here. The wave 4 could be anywhere within 350, 360 to the 21 weekly moving average, the blue line, which is approximately 350. And then once we complete this wave 4, then a likely wave 5 towards 530, 580 to 600. Of course, if Tesla bottoms sooner and breaks through 440, that would mean we're starting the wave 5 much sooner. So if Tesla manages with force to break through 440, that means we're starting the wave 5 rally to 530 to 580 to 600 much sooner. But actually, my personal point of view, based on what I'm seeing on the chart, I think that it's quite likely that as long as Tesla stays below 440 greenish line, I think that we have a bit more of a lower low to go on Tesla to this region, as I explained, for the wave 4. So as long as we stay below 440, there is a risk, there's a probability, actually we could test this region between this orange line, 360 to about 350, before we complete the wave 4, potentially in this region there. And then finally, once we complete wave 4, then a move up to the 530 to potentially 580 to 600 region there for the wave 5, for the C wave of B to complete, okay? For this yellow C wave of B to complete within, as I mentioned, within this larger degree structure and this region, okay? So that's what I think is quite probable and likely. And yes, going to this particular diagram, the Elliott wave model, I think that this, on the balance of probabilities, I think that this is where we likely are on the structure, on the Elliott wave model. So if this was the high we made back in 2021, and then the big drop for the A wave, which took us to 2023, then the big rally from 2023 to 2024, 2025 there, okay, and that's the B wave that I explained. And yeah, I think as far as we are concerned, the probability is that we're completing the C wave of the B wave. So I think probably we're here, more or less. So I think we're completing the final waves, the final structures of the rally in the C wave of B before B wave then tops. I think we could see a potential top in this B wave sometime by the end of this year. It could be in the middle or perhaps by the end of this year. By the way, in case you're thinking, does that mean once the B wave tops, then we could see a big, larger degree C wave crash and drop? Yes, that is correct. If you're wondering why, well, go and watch my previous video about the stock market and that yield curve inversion that I showed, which spells out a likely recession in the economy and a likely top in the stock market sometime perhaps in the next several months, likely this year. Most of the data suggests that we're heading towards a likely recession, perhaps in the next 12 months, and a top in the stock market likely this year, by the end of this year in 2025. By the way, let me just say this. I realize some of the people watching this video probably will not like what I just said in this video about the price of Tesla likely topping in this B wave. In other words, likely seeing a top in the B wave, the C wave of B sometime this year. They won't like that. They will say, no, you have no idea what you're talking about, Alessio. The price of Tesla will just go up forever. Forever and ever, the price of Tesla will just keep going up. All right, guys, listen, if you actually agree with that point of view, that the price will just extend forever and ever higher based on fundamentals, schmundamentals, that nonsense, go ahead. Follow that idea if you want to. But just remember, those were the same imbeciles, the same numbskulls who did not see that there was a major top coming in the price of Tesla in 2021. So those same people who said the price of Tesla will just keep going up forever, those are the same people who said that back in the year 2021, before that major drop which occurred, dropping the price of Tesla by about 60 to 70%. By the way, those same people who said the price of Tesla will go up forever were the same people who at this point in 2023 said the price of Tesla will crash even further to $50. Go ahead and watch my previous video. Go and watch my previous video from November. I showed you the comments I was getting at the time in 2023, at this time, when we were bullish. So I was bullish on Tesla at this point, but the comments on my videos was, no, the price of Tesla will not go higher. It will drop further to below 100, to below $50. Okay? So just remember that sentiment is what drives the market, not fundamentals. All right, guys, so that's what I have on the chart of Tesla. Before I go on to NVIDIA, again, one more time, I'm still remaining bullish on Tesla. So I think as long as Tesla remains above this 21 weekly moving average, as long as we stay above the 21 weekly and the 330 level, I still think the higher probability is for the wave 5. Once the wave 4 completes, I'm still looking for that wave 5 for a move eventually higher. Okay. In other words, for a move eventually to 530, 580, 600 levels. So I'm still remaining for the next several months. I'm still remaining bullish. Let's go on to the chart of NVIDIA. Now, I don't have a lot to say about NVIDIA here because I think it's quite simple to explain. So I don't want to make this video too long. So as far as NVIDIA is concerned, I think the path of least resistance here is still to the upside. Again, we're still remaining in an uptrend. Yes, I do realize that NVIDIA has broken this uptrend line here. But overall, we're still pulling back to the 200 daily moving average. There's a daily chart of NVIDIA. And we can see we're still pretty much in an uptrend. We're making higher highs, higher lows, and we're just hugging that 200 daily moving average there. And I think that this recent drop here, was an ABC correction. A wave, B wave, C wave to the 200 daily moving average there. We're holding that support at the moment. We're holding support there at the 200 daily moving average and the 1382 Fibonacci extension there, about 117. We just hit that level and bounced. So even if NVIDIA were to extend a bit lower, let's say to 111, 110, I still see this as a larger ABC correction. So even if NVIDIA were to drop a bit lower to, let's say, 111, 112, 110, again, I'm still seeing this as a large ABC correction before the C wave of this ABC correction then completes and then likely rally higher for a new move to higher highs. So in other words, in a nutshell, I'm still seeing NVIDIA here pulling back to support at the 200 daily moving average there. And I think once NVIDIA gets back above the trend line, once NVIDIA manages to get above 129, 130, if we get a nice green bar rally above the trend line, above 130, that could be a strong sign that likely NVIDIA's bottom there. Okay, and I think we could then fill this gap on the chart. There's a gap here. Let me just zoom in. We can see this large gap that formed recently on the chart of NVIDIA. There it is. So I think this gap could fill in the next several weeks. Again, gaps don't always get filled, especially on stocks. So there's no guarantee this gap's going to get filled. And I think it's quite probable that once NVIDIA gets above this trend line, 129, 130, then I think we could go ahead and fill this gap near the 140 level there. If we go on the weekly chart of NVIDIA, so notice that on the weekly chart, it's quite interesting that we're just holding that 50 simple moving average on the chart there. So NVIDIA, even though it broke that trend line, notice where it dropped down to. It dropped down to the 50 simple moving average, this grayish white line, and we held this level and bounced. Now, that does not necessarily mean that NVIDIA has bottomed, although I do think it is in the process of bottoming. So I do think we're getting close to a potential bottom here in NVIDIA. So even if NVIDIA were to extend a bit lower to, let's say, again, 111, 112, 110, I think that we're in the process of bottoming in this C wave of this ABC correction. Okay, so A, B, C. I think we're in the process of potentially bottoming in the C wave. All I'm waiting for confirmations. I would like to see confirmation of a bottom by a move. I'd like to see a nice green bar, some rally or close above this resistance at about 129, 130. Once Nvidia manages to hold support and then get above 130, that would be a strong indication of a potential bottom in the price and the correction, and a likely sign that we could potentially rally to new highs above the levels that we formed last year. Okay, that actually is my higher probability expectation for Nvidia. So at the moment, I do not see a top on Nvidia. That's really what I have here on the chart of Nvidia. Let me just also mention a couple of things. Firstly, if you haven't yet joined our membership, please do so. We cover the stock markets and Bitcoin and gold. And if you're not a member, you can join in the link in the description. Plus, also, I've made a video about why we use Elliott waves. If you haven't yet seen that, go ahead and you can see it right there. Click on that video. It's a very important video. But I want to thank you very much indeed. Bye for now.